models are very powerful. You can never trust a model. It can look as polished as it can be. They can lead you down the wrong path.
Worst financial model you've ever built, you've seen, you've worked with?
It was that some basic formulas were totally off. And the big takeaway for me was that
Narek Grigorian is a finance leader with a background in private equity, investment banking, and real estate development. He's helped scale startups and led multi-million-dollar projects. With experience across sectors and a passion for innovation, Narek delivers strategies that fuel growth and long-term value.
What would you say is the most common mistake you see in real estate models?
real estate models look at how the market will perform in the next 5 to 10 years. I would say two factors are market growth assumptions and tenant vacancy rates. Tenant vacancy rates are really important to calculate with this given periods.
What are the most important assumptions with real estate models?
I would say very, very important one are
Financial Modelers Corner is the world's premier modeling podcast. It is brought to you by Financial Modeling Institute, the world's leading financial modeling accreditation organization. Welcome to Financial Modelers Corner. I am your host, Paul Barnhurst, aka the FP&A guy, and this is a podcast where we talk all about the art and the science of financial modeling with distinguished financial modelers from around the globe. The Financial Modelers Corner podcast is brought to you by the Financial Modeling Institute. FMI offers the most respected accreditations in financial modeling. It's why last year I completed the Advanced Financial Modeler, and this year I'm scheduled to complete the Chartered Financial Modeler. Recommend you check them out. But let's get back to the show. I'm thrilled this week to welcome to the show Narek Grigorian. Welcome to Financial Modelers Corner.
Hey, Paul, thanks for having me.
Yeah, really excited to have you. I'm looking forward to our conversation. And so we're going to start with a couple questions here, and then I'm going to give you an opportunity to tell us about your background, and we'll take the conversation from there and just have a fun time chatting about modeling here. So you probably know it's coming. Worst financial model you've ever built, you've seen, you've worked with. Tell us the story.
Sure. Very excited to be here, and thanks for having me again. Well, right off the bat, I think everyone in the financial world can remember one bad model they saw. And the big takeaway for me was that you can never trust a model that looks polished. As polished as a model can be, you just have to look at how it's built and the formulas and how they are all connected together. So the specific model that I remember right off the bat, it was that some basic formulas were totally off. And we had used very beginning starter modeler to put this model together. And what happened was the most basic things, such as debt service coverage ratios and operating expenses, they were not adding up. And these are the fundamentals, right? And so if that's wrong, then the whole model goes off track very, very quickly. And so, one of the biggest issues that this model also had was that it did not account for things like escalating operating costs over time, which this was a real estate model, and in real estate, it is very crucial. It also did not factor taxes, depreciation properly for the assets, and it could be both equipment and the homes that we're looking at. Also, just totally skewed the long-term projections by not factoring in the taxes and the depreciation. And then for this specific real estate model also, they did not consider that the tenant turnover, which is a key revenue driver in a real estate model. And if you have built one, you know exactly what I'm talking about. When you're leasing out commercial spaces, then this is a very niche and important revenue driver. All of this combined were forcing me to go through every part of this model and micromanaging things, starting from assumptions, recalculating everything, and updating each and every cell basically to better reflect market conditions. And, the big takeaway here again for me was that you can never trust a model. It can look as polished as it can be. And, models are very powerful. If they're not done right, they can lead you down the wrong path. And based on the model that I was given, everything was just completely off. And this could make everything in your model unpredictable, especially in real estate.
Yeah, I could imagine a model without depreciation, taxes, and no capacity assumptions like turnover, whatever you want to call it, right? You can't assume you're going to have 100% tenants at all times. It's just completely unrealistic. I don't build real estate models, and I know that. That's pretty common sense.
And they did not have a correct whack. So, if you don't have a correct whack and the cap rates you're using are way too optimistic for the market, then you're really going down the wrong path with the real estate model that you're building.
Yeah, I could see where whatever the answer was, it wasn't the answer the business should be receiving.
Right. 100%. And
It
so,
may have been the answer they wanted because they showed really good revenue, but that only means you're gonna have problems down the line if that's not
right.
achievable.
So what I was given essentially was a wardrobe of clothes. And instead of being given a person to dress the person with the wardrobe of clothes that I have, I had the clothes and I had to create a person and put the clothes on the person, which is the toughest part. So essentially I had to redo the whole model. It was, nice looking and everything, but doesn't matter.
Yeah, I mean, like I said, you can have as nice a looking model as you want, but if it doesn't make sense, it's not valuable. And you
Right.
can have a model that's not structured well, but at least has good assumptions sometimes and that can be valuable. Obviously, you want both because we've all had those models where maybe it gives a good answer, but it's impossible to follow and figure out. And then you've had the ones that look really nice, but have wrong assumptions everywhere. And you want a model with good assumptions and good design at the end of the day.
Yep. I agree.
So tell us about your background. Tell us a little bit about yourself and what you're doing today.
Yeah. So currently I work at US Capital Global, which is a global investment banking firm, financial services firm, headquartered out of San Francisco with offices in London and Dubai. We are able to provide credit and securities, wealth management. So full services, financial services firm in short. I specifically concentrate on the real estate vertical within the firm and the energy vertical. I think that in the past few months, there's been a lot of energy based project excitement within the US, as there's a lot of capital inflow within certain states, such as the Southern Belt, mainly the Sun Belt states, such as Texas, Louisiana, to mention a few. And specifically within the LNG world, there's a lot of excitement within the US. So, we're in the lower middle market to middle market. We cover the space that JP Morgan and the likes of Goldman Sachs don't really look at. So, that's what US Capital Global does. It's a very nice and reputable firm, a FINRA licensed broker dealer. And we are doing projects in the realm of 10 million to 200 million or higher globally and within the US, depending on what sector and what field the projects are in. We are generalists, which that means is that we are sector agnostic. And this gives us the leverage to adopt and adjust based on global market trends and financial flows, where the capital is flowing from and it's where it's flowing to. So this global presence with my colleagues gives us that advantage to navigate the field of this very, very interesting and exciting times globally.
No, it's definitely an exciting time. I mean, right? You got a lot going on. We have interest rates that have risen, all the inflation concerns, tariffs, people saying, "Hey, are we going to deal with stagflation? Are we in a recession? When will we be?" Right? It's been a weird market for 5 years. I think, kind of from COVID since it's really, we had historically low interest rates, money was free. And then in the last 5 years, we've had a ton of uncertainty and change. So it's definitely a time where models can help, and understanding all these different things and trying to make the best assumptions you can is important because a lot of risk, a lot of uncertainty.
For sure. I totally agree. And I think we are at the time where it's very, very consequential in terms of, are we in a stagflation? Is that coming? And so that is the doomsday scenario. And we had the first quarter results, which was not too good for the GDP of the United States. So everyone's holding their breath for the second quarter and what the effects are going to be in that sense.
Yep, at least the inflation in April was lower than we expected. And, some of these tariffs have backed off. So hopefully, we're not spiraling toward a major recession, but still hard to predict.
from what we see, there's a lot of excitement for foreign direct investments in the United States, and there's a lot of excitement within the United States for specifically, let's say, real estate developers and energy investors. And I think we're at a crucial time where if these tariffs are waived off or done in the right way, where deals are being made between the two countries, then we're really going to see record-breaking numbers in the next few years for the economy if things can be adjusted and the supply shock can be mitigated from the tariffs within the last few weeks.
Yeah, it'll be exciting to watch. I know we've seen some big announcements on deals, and so hopefully it all plays out well. So I have a question for you. I'm curious. You're obviously in the US now, but you started your career in Armenia. Kind of what was your path or thinking? How did you go from Armenia to deciding, to kind of come work in the US?
Yeah. So I did start my career in Armenia, but I think that the opportunities in US really drew me. And a lot of people are drawn to the US, obviously, for the opportunities that this country presents. United States is such a hub for innovation and growth. There are certain cities that I can single out, San Francisco being one for the innovation that comes out of the, San Francisco and the surrounding area, Silicon Valley, obviously. And these are fields that I'm especially passionate about. Now, when it came to education, there's something special about the system and how it encourages curiosity. And there's something about the United States where it fosters creativity, again, depending on the institutional education that you get. So I came here. I also studied for university in the United States in the DC area, Georgetown University and University of Maryland in College Park. So I think that United States gives you that challenge to solve real world global problems. And it gives you this global perspective. So this is something that I found especially appealing. And the opportunities are very diverse here. So that's what I'm really passionate about the US. And it helps people advance their careers, have a good, healthy life, and kind of progress along and build a really nice environment around them and around their friends and families.
No, it makes a lot of sense. There's a lot of great opportunities in the US. And I kind of laughed when you said, a lot of niche markets and innovation. My goal is to dominate the niche market of finance podcasts that don't have the title of CFO in them.
Yeah, I think you're doing it. I've been listening to your podcast and I've been following it for the past, I would say, 6 to 8 months. I came across it on LinkedIn organically. So I think that's the key. Organic growth is how the next sort of podcasts and this entertainments are coming along, because people are stepping away from the TV and the traditional cable. And podcasts are educational and you can listen to them while you're driving, eating, doing whatever you want to do.
Content has changed the game, and being recognized is more important than ever, because with AI, it's so easy to create content, right? You could share pretty much anything, and often it can be valuable. And so I think, as you talk about that, as people recognize you and you build a presence, that becomes so important when you combine that with content in today's world. It's really interesting to watch. When I started, there was no AI, and now I use AI to help me be more efficient and effective. I couldn't do near as much as I do, but I also see a lot of people that all the content is just AI. And so it's so interesting to just see how, the content world has changed. But I agree with you. It's amazing what we can do now, right? Go to YouTube, podcasts. If you want to learn pretty much anything, you can go to your computer and find out about it.
Yeah, and I think not many people know that was not a way that people could do some things back 30, 40 years ago, or even 20 years ago. It was not this easy. Now everything's accessible, whether you are in the nature, in the middle of nowhere, or you are inside a house with the Wi-Fi, or wherever you are. We are so connected, and there's so much information on us that I think it's creating a lot of good things and a lot of chaos. So let's work and take away the good things and use the AI for things to help us progress along and learn and make our lives easier.
Right. It's like anything. It can be used for good and bad. It's, it's just an instrument, and we have to choose to use it for good. But I totally agree with you. I look at my daughter, and she grew up with a touchscreen in her hand. And I'm like, there weren't even cell phones when I was a kid. First computer was when I was in high school. And so it's just such a different world, and it's pretty amazing. But going to shift gears here a little bit and get more into modeling and talk about that since that is the show. I'm sure I could go in a different direction. We could have a great conversation, but my guests might be like, wait, what are they talking about? So I'm curious. I know you've worked in, you've modeled for several different industries, real estate, biopharma, and others. Do you have a favorite industry that you like to model? Is there one that you're like, oh yeah, you get really excited about?
I've done many different models across many different fields, as you mentioned, real estate, tech, biotech, and energy. I have to say that probably because it's easier and more straightforward, energy models are definitely one of my favorites to build. And there's something about the structure of the energy models that keeps it very interesting, and you want to finish it before you walk away. I know it's a little tough, and you get a little geeky with this, but you do want to sit down and kind of get through it. And I'll give you an example. Okay, I was building a model for a refinery, and this applies to any kind of energy infrastructure in general. So there's a lot of moving parts. For a refinery specifically, and any other energy infrastructure, you have capex, operational costs, and most importantly, revenue assumptions. And a big part of this is also standing in the energy modeling offtake agreements, which often remain fixed, but are also linked to spot trading prices. So these prices can actually be pulled directly from live data sources, and this adds a real-time element to your model. And this makes it pretty unique compared to other industries otherwise. And the key assumptions evolve around things like planned utilization rates, the product yields, energy markets, future prices outlook that you have. And of course, you have to factor in regulations, shifts in policy, and how it's going to perform long term. Short term, I would say 1 to 12 months. Long term, you have to start making adjustments.
Makes a lot of sense. Thank you for sharing that. I haven't modeled energy, so I'm not familiar, with that industry. And so it's always fascinating to hear what different people say. So I love that because I hear a lot of people say they like energy models, and I know they're very long. I know they can be complex. There definitely are some challenges to them, but there's something that are big right now because we're all trying to figure out the next energy source and how we manage our energy for the planet going forward. So it's definitely something that a lot of money, a lot of time, a lot of capital is going into. But I want to step back. So I appreciate that. I want to switch gears a little bit and talk about real estate for a minute. And the reason I do that is we haven't talked real estate much on the show. Talk a little bit about energy and some of those models, but not a lot on real estate. So most of the real estate models you've built are commercial, residential. Maybe let's start there. Like kind of what are the general models you've built in real estate?
Yeah. Happy to talk about it. I think the reason I didn't mention real estate because I do it too often. And
yeah, no, I get it. Totally.
Yeah, energy.
Mentioning energy, that was great.
It just stands out. But look, with real estate, right? When it comes to real estate model, there's just such a wide range, and you touched upon them, Paul, talking about commercial, residential, and all the different options we have. So I've done most of them. I think there's new things that pop up. There's the new models with the 3D printed houses, and that requires new modeling skills and new assumptions, like the one Leonard did with Icon. I think it was in Dallas, Texas, if I'm not mistaken, and that has had a lot of success.
So have you modeled a 3D printing one yet? Have you done any of that? It would be fascinating to see the cost, and you got my brain thinking right now.
There's so many factors and variables in it with what's the cost of pouring out the cement from that needle, and if you spit out a little more cement, how that's going to change it and make the walls thinner, make the walls thicker. It's really crazy. But
yeah,
I'll tell you about one that I've built specifically, and I do this the most often. So building a subdivision land development model, right? Subdivision is when you buy raw land, and then you're doing your wet utilities, dry utilities, putting roads and getting it vertical ready for the builder to come in to step up and build the house. So for building a model specifically for subdivision land development is complex because you're not just looking at construction costs, right? Here you're factoring in zoning regulations, permitting, the overall market demand, okay? And the first step is usually understanding the raw land costs and then projecting out the buildable units. whether it could be homes, it could be condos, or it's mixed use, right? A lot of these subdivisions are, majority of it is residential. And then the frontage where it's hitting the main road is, as we mentioned before, commercial spaces. So from there, you calculate, the infrastructure development costs. Again, roads, utilities, drainage systems, the environmental impact assessments, if necessary. And there's even TIF bonds sometimes that you get. So you have to calculate that and understand how you're going to factor those in. The key assumptions with this model that I'm specifically talking about revolve around the projected sales price per unit, the timing of the construction, the cost of financing, and the construction loans. Also, of course, I would say very, very important one are interest rates. And what is the timing of your construction? Because interest rates can be variable, or it can be fixed depending on basis. Right now is SOFR, so secured overnight financing rate. So SOFR is getting adjusted as the bonds, obviously, and the markets playing in the Feds, deciding to cut rates or keep them steady. So what makes the subdivision model unique is that it's very cash flow intensive in the early stages. But when the payback comes, it's done very nicely, and the units are sold over time, which this makes it crucial, right, to track everything from construction progress, which is the beginning part, to sales velocity, which is the last part of it.
Yeah, of course. They want a return on their money. That's what it's all about. And so I'm curious not always, but you know what I mean? In general, that's what it's about. Sometimes people want to do the project for passion and other things, and they want a return, but that may not be as important. There are definitely some of those get done. But I think in general, for most people, it's what's the return is what they're really focused on.
Right. The developer can do projects for what they have a passion for. But when the developer is attracting pref equity or equity investors, now the investors, what they're looking for is the payback. So if the developer has all of the equity lined up and he can, the developer can borrow the credit, they're good to go. They can build whatever they would like. To your point, though, the passion is what really should drive anything that you do in life.
Well, my background is in FP&A. I am also passionate about financial modeling. Like many financial modelers, I was self-taught. Then I discovered the Financial Modeling Institute, the organization that offers the Advanced Financial Modeler Program. I am a proud holder of the AFM. Preparing for the AFM exam made me a better modeler. If you want to improve your modeling skills, I recommend the AFM program. Podcast listeners save 15% on the AFM program. Just use code PODCAST. Yeah. And hey, if you're passionate, you want to build something, but it's not going to be profitable, you can only do that so long.
I agree.
It's like, I remember that we had a guy here. He was one of the richest people at the time in the state of Utah. And, he built a sports park because that was a passion of his. And they eventually ended up closing it down. It was a big money pit. He passed away, but he loved it and he had a ton of fun with it. But at some point, the company looked at it and said, we're dumping $100 million a year into this. And, that's not sustainable long-term, or whatever the number was. It was a really big number. And so, have fun, but generally you want both. If you can have fun and make money, that's always a winning combination. So if you were to say with financial models, and I think you mentioned a few of these, the key assumptions, what are the most important assumptions with kind of your real estate models?
Great question. I would say first is purchase price, right? Which includes the cost of land, property, transaction fees, closing costs, title fees, everything. And then from there, purchase price, we look at the construction costs or the renovation costs, whatever you're doing, right? Depending on if you're flipping or if you're going ground up. Next from there, right, is the sales price or the rental rate if you are keeping them as rentals. These assumptions are based on market comps, and the demand projections within the area where you are conducting the development. Then there's the financing piece, which is, again, in my opinion, one of the most, if not the most important part of this, where the interest rates and the loan terms are aligned, how much equity you'll need to put it all into a nice big roll. And this shapes the cash flow, the projections. Another key assumption is obviously operating expenses. Especially if you have rental units, there's property management costs. Even while you're building a subdivision, there's property management costs, there's utilities, there's maintenance, right? Because you're not putting up 100 houses at once. You're going at a stage of 10 or 5 and, the other tenant 5. So
yeah, you're building it over 6 months, a
right,
year, 2
right.
years, whatever it may be, depending on the size of the project.
Sometimes longer. Yeah,
Yeah,
100%.
5 years, whatever. I mean,
Yeah. So in real estate, especially if you have rental market, right? If you're dealing with rentals, real estate models look at how the market will perform in the next 5 to 10 years. Because you're really trying to get it into this condition of what we call stabilization, a stabilized product, in order to sell it off to a REIT. And during COVID, we saw a lot of those transactions where the modeling was done correctly, and large REITs from areas like Miami came and picked it up for very, very large equity returns, in the multiples of 3 to 6, 7x, which was unheard of. And so, real estate models look at how the asset will perform in the next 5 to 10 years, the factoring trends, and the overall economic conditions.
yeah, no, it all makes a lot of sense to me. What would you say is the most common mistake you see in kind of real estate models? Where do you think they have kind of the highest risk of going wrong?
Yeah, I would say factors are market growth assumptions and tenant vacancy rates. So a lot of people do not calculate tenants' vacancy rates correctly. And it is very important to estimate how many units might be vacant at any given time, which affects the rental income. For example, somebody is, you rent out a unit for 13 months, right? People assume that after the individual in that unit or the family is gone after 13 months, it is immediately rented the next day. Wait, hold on a second. Let's break down the costs day by day, right? So you have to go into the accounting and understand what is the daily cost of holding this unit vacant. And so you usually have a hold or a renovation period between tenants of 30 to 50 or 30 to 60 days. So again, tenant vacancy rates are really important to calculate with this given periods, right?
Sure, if you have an average of 6-month leases and you have 100 units and those are staggered, every so often you're going to have maybe on average 4 units open constantly or whatever it might be. But understanding that assumption makes sense because that can be a huge difference in that revenue. If you're assuming 100% operation, of course it's going to look profitable, but it doesn't mean it's right.
It's a false model.
Exactly. It's not a right answer.
Right.
All right. So, we've talked a little real estate. I know you've also done a little bit of Biopharm. And when we chatted before this, I made a comment about one of my favorite quotes, and you commented back with something. And so I want to kind of talk a little bit about this. Many of people that have listened to the show have heard me say all models are wrong. Some are useful, quote by George Box. And I said that, and you modified that for Biopharm. What did you have to say when I said that?
Yeah, so George Box, right? A great statistician, and we had a great conversation about it. What I said for Biotech Biopharm is that all models are wrong. End. So it's just all models are wrong, full stop. I can go about it explaining why. Paul, would you like me to?
Yeah, that's what I'd love to go next. Is why is that so hard, or why do you say all models are wrong?
Look, obviously there's a little bit of irony here, but let me kind of go through it and what I meant by that. All models are wrong, and that's that for this specific industry. And essentially, what this means is that biopharma, biotech, tech bio, however you would like to refer, in the industry that we're talking about, there's so many unpredictable factors at play. From the basic regulatory changes that happen intraday, clinical trial outcomes. Are you going to need to prove to the FDA something that you didn't in your first clinical trial for the second one to come up? Are they going to spot something? Patient responses to treatments when you're conducting the experiments or you're going to conduct the specific study, right? The clinical trials. These are all incredibly difficult to model. Now, when I say all models are wrong, they're not. I wasn't implying that they're useless, right? Of course, you need models. If you're going into this specific arena in the field without modeling, then you should just leave the field and not have to do anything with it. And the key point is that while, all models are going to be flawed, they can still provide incredible value, especially when used for decision making. A model in biopharma, for example, can forecast the potential market size for a new drug and estimate the timeline for that drug's regulatory approval. It could be based on historical data. There's always an inherent, uncertainty. So the models might rely on assumptions about the, rate of patient enrollment, likelihood of your clinical trial success, or the pricing of the drugs once approved. And I think the value here comes from recognizing the limitations of the model and continuously refining it as you progress, as new data becomes available.
Yeah, and I've had someone on the show talking about Biopharma, and I've talked to a few people, and they all express a similar thing. It's a very difficult area to model. It's a little bit portfolio in the sense of, okay, I got 10 different drugs, 9 of them might fail, but if one hits, I can make good money as long as it, hits big or whatever. And so, right, many of those models are going to be completely wrong, but in the whole, you could still make money. It's kind of like movies in some ways, a little bit different, but right, movies is all about portfolio. It's not about every movie making money. They know when they start, they're going to have big losers, right? We've all seen the blockbusters they spend 300 million on, and it makes 80 million in the movie theater. And it's like, oh, wow, we really lost a lot of money on this. But then you have the one that costs 40 million to make and makes 500 million.
Yeah. And that's a hit out of the park. So there you go.
Yeah. It's definitely interesting. I think, those type of interests would be a little scary for me. I related to, the people that when I worked in FP&A, one of the things I did is I calculated a lot of people's sales incentives, their commissions. And every so often I'd see the guy that made 80,000 in 1 month. And I'm like, man, I should be in sales. But then I'd look at the other 5 people that I'm paying $0 to. And I'd be like, no, I'm good with this nice steady paycheck.
Right. Yeah, you're totally right. I get it. That's the case. Yep.
So, all right. So I want to shift gears here a little bit. We have some kind of standard questions we ask each guest. And so the first one, what's your favorite Excel shortcut? What do you use the most?
Right off the bat, I have to say the most basic one that's used daily, and it's, the favorite is the control plus, right arrow or left arrow or control and the down arrow. So it takes you to the last cell in the column with the data you're working with, or, makes you jump around large data sets pretty easily.
I agree. Control plus arrows are some fabulous ones. I like it. All right. As you look back over your career, what's the number one lesson you've learned that's helped you the most?
I think the number one lesson always has been in my life specifically, the passion. So I'm passionate about what I'm doing. I think passion isn't just about being excited, but it's really believing in the work you do and feeling a deep connection with it and waking up and wanting to do it. So I think when you care about things that you're doing, it just doesn't feel like work anymore. It feels like you're contributing to something larger than life, and it provides you with an energy that helps you push through challenges, embrace new opportunities, and continuously grow.
I like it. Thank you for sharing that. All right, so this is a fun question we ask everybody. What's the most unique or funnest kind of thing you've used Excel for in your personal life?
I've listened to your podcast. I've been listening to it for the past few months, and I was waiting for this because I do have a little quirk. And Essentia. So I'm a big water bottle drinker. I've bought a lot of water bottles from different brands. Essentia is my favorite. I've no equity ownership of Essentia. I just like the water, or any other water company for that matter. You know what? I created a actual model for water bottles because I was spending a lot of money on various sizes, right? They come in various sizes, various shapes. They can be reused if it's glass. So I was curious on sort of how much I was spending with my family on water bottles. So I created this full-fledged model to figure out the best deal and how there are sometimes deals in various stores, right? Whether you buy it from Whole Foods or Giant or Kroger's or wherever you are. My model compared the cost per ounce. I know it sounds ridiculous. And then it turned into this whole analysis where sort of the cheap store brands to, the premium water brands. It was just a fun little metric I used. And I got a good laugh out of it with the family. But that was a fun model I made.
Bad financial models can lead to bad decisions, or worse. So, how do you minimize the risk of a bad model? You make sure the models you build are great. Financial Modeling Institute developed the Advanced Financial Modeler Accreditation Program to help modelers like you. The AFM program offers a step-by-step approach to building world-class financial models. The program ensures that you know the best practices in model design and structure, and will help you brush up on your Excel and accounting skills too. Be the one on your team to build great models. If you want to impress your boss and your clients, get AFM accredited. Podcast listeners, save 15% on the AFM program. Just use code PODCAST at fminstitute.com/podcast. Yeah, so that's when you know you're a nerd, when you build a model like that. We've all done it. I've had one guy, kept taking his dog to the, kind of dog hotel, one of those type places. And so he finally went back and calculated what does that look like? How much money could they make? And, the whole business. So I appreciate you sharing that. So what did you determine? Are you spending too much on water? Did it save you money?
No, definitely spending too much. And I'm actually on the cusp of doing another calculation because I called a contractor over for putting a filter on the whole system of the house. It is costly upfront, but I am about to run a model to understand what is the payback period for that filter. It is in the thousands. So, I got to understand the cost of, the net present, what's the present value of this, what's the future value. And so this will help me.
When you get all done, share that model with me. I want to see that one.
I would love to. Yes. And we
might put it up on the website. Anyone who needs a bottled water versus filter model, here you go.
That the comparison to that is, making a model for solar panels or, continuously using utilities that you're provided. So
yeah, exactly.
So it's actually largely going to stem from that. When I was modeling it in my head, it's going to stem from the same factors.
Yeah, I'm sure you thought of all that because you've done that type of that. That's funny. Right. So let me know what you decide. I'll be curious to see what the payback period is.
Of course.
All right. So now we're going to move into rapid fire.
Mm-hmm.
No, it depends. You get to say yes or no on each of them, and then at the end you can elaborate. So I'm going to run through these quickly. First one, circular references in models, yes or no?
No.
VBA, yes or no?
Yes, VBA.
Do you prefer horizontal, one kind of sheet, or vertical, vertical, all on one sheet, horizontal, lots of sheets? I'll get it right eventually.
I prefer vertical models.
All right. What about dynamic arrays in models? Yes or no?
Yes, I like dynamic arrays. Yes.
How about fully dynamic array models where you're using lambda and different things to manage corkscrews? So the entire model is dynamic.
Yeah, I think I use it all the time for the most part.
Love it. All right. External workbook links, yes or no?
They slow things down, but I prefer to keep it in one workbook. Usually.
Okay. Named ranges, yes or no?
Yeah, I use named ranges.
All righty. Do you follow a formal standard like FAST or SMART or any of these that, those formal boards out there that say, hey, model this way?
Yeah, I do. I do from time to time. I try to stay consistent and organized in that sense.
Okay. Should financial modelers learn Python and Excel? Yes or no?
I think it's a great skill to have. I think Python can help with automation and, a bunch of other things.
What about Power Query?
Power Query is incredibly useful as well.
I'm a huge Power Query fan. What's Power BI?
Yeah, I think Power BI is also essential. I'm going to have to, for data visualization especially. So
I like it. Will Excel ever die?
That's a tough question. Right now I'll say no, but we can talk about it later.
All right, we'll elaborate on that one at the end. Do you think AI will build the models for us in the future?
In the near future, no. In the far future, possibly, yes.
Okay, fair enough. Are financial models the number one corporate decision-making tool?
I'll keep it simple for now, no.
So what do you think is?
A great question. I think it's very important. I think that it should be the number one factor Okay, I have to say that. Okay, if the model is not making sense, then stop what you're doing right away. If the model shows that you're not, going to proceed with the assumptions that you wanted to stop immediately, and rethink about what you're doing. But I think that if the model, again, if this is a good model, it should have data driven insights. In a sense, it should stem from market research. So when I'm saying no, I'm talking about simple models. Now, if we have models that have data to back it up, that have market research and qualitative analysis, these are, if everything is contributed to the making of the model, then I believe that financial models are the number one corporate decision making tool. So that's what I meant by saying no.
Okay. I thank you for elaborating there. All right. What's your lookup function of choice? Which formula do you go to?
Yeah, it would have to be XLOOKUP, because I think that it's more flexible and handles a lot of things with more ease than VLOOKUP.
Yeah, I prefer XLOOKUP. I'm probably XLOOKUP, index match, VLOOKUP.
Right.
I like
that's actually a good order.
I put filter in there as well, depending on how my data is structured, but yeah, I agree with you. I probably use XLOOKUP the most. All right. You also wanted to elaborate, I think, on will Excel ever die?
Excel is essential right now. Now, the same way that there are new programs and, things happen, right? Microsoft comes up with a new name maybe for something that's based on Excel, but integrates maybe many AI components within this new framework, right? So you can have Excel that is, for example, spitting out some form of Excel that's starting to spit out formulas and begin to, fold out assumptions. So I can see something of a new innovative way where Excel can be integrated, but not in the near future, but not in the far future also. I think we might be seeing something within the next, 4 to 8 years in that realm, where it could be a new version of Excel, or it could be a rebranding for marketing purposes.
Yeah, it'll be really interesting to watch. Everybody kind of has a different opinion on this. As I always say, in the long run, everything's dead. The question of how long. Do I think it's going to go away anytime soon? No, I think, the rebranding, going to a cloud, some of those type of things, but it's going to take time.
I agree.
I had a big debate about this on LinkedIn, and I think the biggest thing that will take time is, VBA.
Yeah.
Right. VBA doesn't work in the cloud. Microsoft hasn't really supported VBA for a while. They still allow it, but they're not developing new stuff for VBA.
I agree.
think if they had their choice, they would like it to go away, in the sense of it's not easy to support in the cloud. There are better languages, but at the same time, if they stop supporting VBA tomorrow, the financial world would just about collapse.
I agree. I couldn't agree more.
So, that's a long journey. It's years from the day they say, hey, we're going to go to a platform that doesn't support it, to untangle everything and to move forward in whatever way they choose to move forward when they do. I think it's a matter of time personally.
Yeah.
Others think VBA will be here forever. We'll see.
Well, VBA is essential right now. You automate repetitive tasks, or you want to streamline some things, but you keep it to a good amount. You keep it to a minimal, so you don't want to add too much complexity to what you're doing. That's unnecessary, but it is absolutely needed. I agree with you.
I think you could do a lot. You could do a lot with Office scripts if they open up Python more, Power Automate. They're putting the building blocks in place to allow you to do those things. Power Query replaced a lot of things you used to do in VBA, but they're not fully there. I think anyone would acknowledge that.
Yeah, and that's what I mean. I think there's just so many things spread out within the industry, Paul, that a few things have to come together, whether it's the AI models merging and getting integrated into different software programs. I think there's going to be a lot of M&As coming into this industry, generally speaking.
Oh, I think in the finance space, the spreadsheet, there's so many AI tools being developed right now, right? At some point, we're going to have similar to a .com.
Yes.
There's going to be a number of companies, the bubble bursts. There will be a lot of acquisition and a lot of change. There'll be some huge winners. There'll be some big losers. But what did I read recently? There's 75,000 native AI companies that have been created since, ChatGPT was released, 3.5.
I did not know that.
Yeah, that's the number I think I'd heard, is 75,000. Right? Think how many that is a day, because we're only talking not even 3 years.
And how many went down the drain because ChatGPT was released? How many did that kill?
So we're seeing like 100 new companies a day or whatever that are AI native. To me, that's not sustainable in the long run, but we'll see. So, last question for you before I let you go. Had a great time chatting. If our audience wants to learn more about you or potentially get in touch with you, what's the best way for them to do that?
I think the best way is on LinkedIn. I have a LinkedIn presence. You can look me up, Narek Grigorian. Filter me with the workplace US Capital Global or school I went to, Georgetown University or University of Maryland College Park. We would love to have a chat. I always like meeting new people and having exciting conversations. I know Paul does too. So, it's a pleasure being on your podcast, Paul. And thanks for allowing me to have this, amazing chat with you. And I look forward to having more of these.
Yeah, no, thank you for joining me, Narek. I really enjoyed it. Like I said, I do love chatting with people, and I'm sure you'll get some people reaching out to you. And I'm excited to share this with my audience. So thank you again for joining me.
Thank you, Paul. Have a great day.
You too. Financial Modeler's Corner was brought to you by the Financial Modeling Institute. This year, I completed the Advanced Financial Modeler certification, and it made me a better financial modeler. What are you waiting for? Visit FMI at www.fminstitute.com/podcast and use code podcast to save 15% when you enroll in one of the accreditations today.